The Fed minutes have come and gone, and no surprise to see the central bank holding the line with respect to its overly accommodative and dovish outlook. And yet, even with all of that dovishness, we're seeing some risk off flow and US dollar demand into the latter portion of the week. We had introduced the possibility that all of the positives had been well priced, and this was factoring into the trend reversals. Though into Thursday, we think there is another major factor at play, which could get more attention going forward. That factor is the inflation factor. Wednesday's producer prices read out of the US was much hotter than expected, and this should be a distressing sign for both the Fed and investors. Any signs of continued upward pressure on inflation will force the Fed's hand into just how accommodative it can be, which in turn will make investors much less enthusiastic about the prospects for lower for longer policy. So, yes, inflation is a big deal and will need to be monitored closely for additional insight. We think this could be a backbreaker for the market if it decides to start pushing up on a consistent basis. Key standouts on today's calendar include the ECB minutes and US data in the form of initial jobless claims, housing starts, and the Philly Fed. That's all for now.